Welcome to the deep dive. We take the source material you give us, and we really try to pull out the core insights.
That's the goal.
And today, we're looking at a company making a pretty drastic strategic shift. I mean, it's quite something in the crypto world.
Yeah, Pi Network.
Exactly, Pi Network. They're trying to move way beyond just being, that simple mobile mining app.
Right.
And vaulting, it seems, straight into, the future of commerce. We're talking payments not just between people, but between people, AI, and even machines.
It's a huge leap. And that's really the focus of this deep dive. Our sources are pointing to three massive interlocking developments that are supposed to pull Pi Network firmly into, relevance.
Okay, what are they?
So we're looking at the speculated launch of a stablecoin, maybe called PIUSD, really focused on utility. Then there's a big strategic push into real-world asset tokenization, RWA.
RWA, okay. Seeing that everywhere.
It's huge. And finally, the technical bedrock needed for all this, the Protocol 23 upgrade, that one's absolutely critical.
But we have to talk about the elephant in the room straight away, don't we?
You mean the price?
Yeah. I mean, Pi Network, founded by Stanford PhDs back in 2019, right? That gives it a certain legitimacy.
It does on paper.
But the price action tells a totally different story. It's down, over 95% from its high?
Mm-hmm.
And it's hovering near this 0.209 support level everyone's watching. That skepticism out there, it's palpable.
It really is. And that's why this deep dive isn't just about listing features. It's really analyzing a turnaround strategy.
Okay.
These new things, PIUSD, RWA, Protocol 23, they're designed specifically to tackle that long market downturn.
Mm-hmm.
The idea is to reverse the trend by delivering actual tangible products, things that prove the network has real value.
Performance, not just promises.
Exactly. The situation demands it now.
Okay, so let's start with maybe the most visionary part, the stablecoin, PIUSD.
Right.
If the network's already struggling with basic market confidence, why jump into something so ambitious? A stablecoin for AI and machines.
Well, the main rumor, and the sources mentioned community analyst Dr. Altcoin here, suggests PIUSD isn't just about creating a simple dollar peg for trading. That's not the main goal.
So it's bigger than that.
Much bigger. The vision seems to be making the Pi Network the actual foundational layer for, future autonomous commerce.
Okay, foundational layer. What does that actually look like in practice? If it's not for buying coffee, what's the grand vision here?
Dr. Altcoin talks about seamless payment channels between people, AI agents, and autonomous machines. The key word is autonomous.
Right.
This is Pi Network trying to position itself for that whole emerging machine-to-machine economy, the M2M economy.
M2M. Sounds very futuristic. Definitely ambitious. But hang on. If the immediate goal is restoring trust now, after that massive price drop, isn't chasing M2M a bit high level? I'm a bit too far out.
A fair point.
What's the practical benefit today of building an economy for machines that aren't even fully here yet?
That's the timing risk, absolutely. But the sources argue that if they deploy PIUSD successfully, it enables blockchain-controlled automation today.
How so?
Well, think about smart contracts automatically paying for cloud services that an AI agent uses. Or factory robots buying and selling parts between themselves, no human involved.
Okay, I see.
If they pull it off, it shifts the perception of Pi Network immediately, from just a social mining thing to potentially critical infrastructure for AI and robotics.
So it gives the network its own native medium of exchange that could theoretically insulate it a bit from the main coin's volatility.
Could too, yeah.
So the real push here is utility, application, trying to finally answer that question, what can I actually do with Pi?
Precisely. It's all about tangible use. If PIUSD becomes that bridge, it starts building real value in answering that core question.
Right. But you can't build this M2M highway or launch a stablecoin like that without the underlying tech being ready.
Exactly.
Which brings us neatly to Protocol 23, the engine room.
Okay, yeah, let's really unpack this one. Protocol 23, or V23, this is the absolute linchpin. It marks Pi Network's complete transformation.
Transformation from what to what?
From its starting point, a pretty successful social and mobile mining project into a fully functional, modern blockchain platform. Simple as that.
Without it.
Without this upgrade, forget the stablecoin, forget the RWA plans. They're basically dead in the water. It's that fundamental.
The sources mentioned they're targeting mainnet deployment, end of Q4 2025?
That's the plan.
Given the project's history and that price pressure we talked about, how realistic is that? End of 2025 feels quite a way off in crypto terms. What are the risks with that long time frame?
Oh, the risk is huge. delay in crypto can be fatal, right? New chains pop up constantly.
Sure.
But the sources do say the framework is being built now. And V23 includes the absolute essentials, full support for complex smart contracts,
Okay.
the integration of their own decentralized exchange, a DX.
Their own DX.
Yeah, and an automated market maker, an AMM, all built in.
Building a DX and AMM from scratch, that's a massive undertaking. Most projects leverage existing tech. Why build their own?
The sources are pretty clear on this. It ties right back to their core philosophy, decentralization.
How so?
The goal is empowerment for the users, the pioneers as they call them. By having their own DX and AMM inside the network, they want users to trade assets directly.
Bypassing centralized exchanges?
Entirely. The community updates specifically argue this is needed to defend against, market manipulation and the human errors you see on big centralized platforms. They even mention issues seen at places like Binance.
So they see centralized exchanges as a weakness, not a necessary evil.
Pretty much a point of potential failure or control they want to eliminate.
That's a powerful narrative for decentralization fans for sure. But realistically, can a brand new proprietary DX actually compete, on liquidity, security, with the established players, even the big decentralized ones?
That's the million-dollar question.
The technical challenge of getting that stable and robust by late 2025 while managing their huge existing user base, it seems immense.
The sources acknowledge it's tough, but they point to the momentum they already have. And to gauge the current health, you have to look at the developer side.
Okay, what are the number?
Currently, over 210 live dApps, apparently. And maybe more importantly, over 23,000 projects are reportedly getting ready to launch using their PiStudio platform.
23,000. That's a lot of potential activity.
It is. Plus, that DeFi testnet, the one with the early DX and AMM features, it's already live. Pioneers are testing it right now in the Pi wallet.
So the community is involved, stress testing it.
Yeah, the tools are being put through their paces, even if the final polished mainnet version is still, a year or so away.
Okay, so if we connect this tech upgrade back to the big picture, all this new infrastructure, smart contracts, the promised low fees, high speed, it seems like it's setting the stage for the third pillar you mentioned.
Exactly. The strategic positioning in real-world asset tokenization, RWA.
Which, as you said, is arguably the hottest trend in finance right now.
Absolutely. Institutional money is flowing there. The sources even reference BlackRock CEO Larry Fink, basically saying tokenization is the future for assets. Pi Network clearly wants to ride that wave.
But what makes them think they can compete in the RWA space? You've got giants like Ethereum, Solana already making moves there. What's Pi's claimed advantage?
Their pitch revolves around efficiency, which is crucial if you want institutions on board. They're highlighting their ecological design, supposedly very low fees, fast transactions, minimal gas costs. That package, combined with the upcoming smart contracts from Protocol 23, is designed to make tokenizing real-world stuff like property or bonds or whatever simple and really cheap, both to create the token and to trade it afterwards.
Efficiency sounds good, but RWA isn't just tech, is it? It's heavily tied to regulation, compliance. You're dealing with actual deeds, financial instruments.
Absolutely.
So they need more than just a fast, cheap chain. They need a way to handle the legal stuff, the compliance.
And that's where their future integration strategy gets really interesting.
Okay.
Pi Network is apparently planning to integrate with Stellar Soroban smart contracts.
Stellar. Why is that significant?
Because Stellar has already put a lot of work into building bridges to compliance. Specifically, Stellar's partnership with something called the ERC3643 Association. That's key.
ERC3643. Why should someone listening care about that standard?
Because ERC3643 is basically a rule book designed for regulated compliant tokenization. It builds things like investor checks and transfer rules directly into the token itself.
Okay. Compliance baked in.
Exactly. So by hooking into Stellar's ecosystem, Pi Network could potentially leverage these regulated standards. This could make their RWA offerings much more attractive to serious institutional players who need that safety and compliance.
So it's an attempt to build trust and formality around their RWA plans. Calculated.
Very calculated, moving beyond just basic tokenization.
Okay, so let's recap the three pillars then. We've got this potentially revolutionary stablecoin vision, PIUSD, powering AI and machines. Then the core technical foundation, Protocol 23, bringing the DX, the AMM, smart contracts for full decentralization.
Right.
And finally, the strategic market play. positioning for RWA tokenization, potentially using that stellar integration for compliance.
That's the trifecta they're aiming for.
What's really striking here, though, is just the sheer scale of the ambition.
It's huge.
Compared to the reality of that market skepticism we started with, that price below $0.210, it's not just a number. It really underlines the pressure they're under.
Totally. And the sources are all saying the same thing. They have to speed up development. They have to deliver these real-world use cases. It's not optional anymore if they want to stay competitive and turn things around.
So for you listening, if you're tracking this project, what are the absolute must-watch milestones, the practical signs that this massive pivot might actually be working?
Yeah, okay, based on the sources, you really need to watch 4 key things. First, obviously, the official launch of the open mainnet. That's number 1. Okay. Second, the successful deployment of Protocol 23. And successful means stable, on time, and with a DX and AMM that actually work well.
Okay, mainnet Protocol 23 working. What else?
Third, you need to see real growth and, crucially, utility in that dApp ecosystem. Those 210-plus apps, those 23,000 projects they need to show genuine user adoption, real volume, not just exist.
Makes sense. Activity, not just listings.
Exactly. And finally, number 4, they need to show continued steady progress on their KYC verification efforts. Know your customer. That's still fundamental for any serious play in regulated spaces like RWA.
Right. So open mainnet, Protocol 23 delivery, dApp utility, and KYC progress. Those are the big signals to track.
Those are the benchmarks, yeah.
And if they manage to hit those milestones, especially that goal of bypassing centralized exchanges, it really brings us back to the core idea of this whole strategy, doesn't it?
It does. The whole future strategy depends on tying these 3 pillars together. Get the stablecoin utility with PIUSD for that AI and M2M economy. Deliver Protocol 23's features, the DX, AMM, smart contracts to make decentralized trading a reality on their platform. And position smartly for RWA tokenization. It's a complete strategic overhaul, really aiming for long-term utility and value, trying to move beyond just market hype.
Which leads us to kind of a provocative final thought, pulled from the source material, something that sticks with you.
Go on.
If Pi Network actually pulls this off, if they deliver Protocol 23, if PIUSD enables automated, machine-driven payments, and if AI agents truly become autonomous economic actors.
Big Fs, but okay.
How might that massive wave of decentralized, non-human economic participation fundamentally change our whole concept of KYC, of identity verification?
Oh, interesting.
If the robot revolution gets its own bank account running on Pi or something similar, who exactly needs to show a passport then?
Yeah, who's the customer you need to know? That's a really interesting question for the future.
Something for you to think about as all this tech moves from theory towards, well, maybe reality.